All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, you like the content, give the video a thumbs up, subscribe to the channel, come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here into the markets, starting off with the S&P 500 here via the S&P Spider. You can see we had a little pullback this week, earlier in the week, actually the first 4 days. Kind of opened up flattish on Monday after the big surge last Friday, and then a pullback here and a little light volume kind of holiday rally on Friday here. So we talked a week or two ago about the solstice pivot. Said that coming into the solstice and the equinox, a lot of times you can get a pivot here, especially when you're really oversold like that. We went down there and that pivot's held, and now it's up to see if the market can put in a higher low here and, you know, potentially put in, you know, some type of a tradable bottom or some type of a summer rally. If you can do that and you take out this pivot high here from this last Tuesday, which would also kind of coincide with this downsloping trend line, if we actually extend that out a little bit, you can see right there. So it basically would coincide with that trend line. Then you'd have upside to about 400, 401 to 408 on the spiders. So those are your levels there. If not, and we do head lower, we talked about the levels a few weeks ago, but we'll revisit them again. So if you take out these pivots here, you're going to look at this 360. Now this will be more minor because we went down and basically tagged it already. But after that, it's basically that 350 level there on the spiders here. And there's also that 50% fib retrace right at that level, 349.70 on the spider. So again, those would be your levels there on the downside if we take that out. There's also a potential where we still pull back a little bit more to that 370 handle, and we could still put in a higher low. So I still have a good support level right there around 370 on the SPY. That could, you know, potentially play out and still put us in for kind of an ABC or kind of a zigzag move up. So that is a potential possibility there. My thought is that we do have a summer rally. We do have some type of a higher low here, and that's based on the cycle work that I've done here really all year long, as well as some seasonality trends. But with that said, I'd still urge caution. You know, again, there is still potential we could flush out. This market has been full of surprises really all year long, so I wouldn't rule out a test of those lower levels that we just mentioned here. As far as the triple Qs, your upside's really the same. So you got this pivot here. If you can get through that, you can, you know, if you can put in a higher low and get through this pivot, again, you got this trend line here. So it's almost kind of like this one coincides essentially with that one on the spiders. If you can get through that, then you can get up to that maybe 303 area. And if you get through that, you know, you've got a lot of resistance up here around this 313, 315 area. But that would obviously be kind of a second thought afterwards. As far as the Russell 2000 here, again, if you manage to get through this pivot, which, you know, again, kind of coincides with the 50 MA. So you see how these charts are all kind of lining up here. You could even make a case there's a trend line, you know, right here on the Russell. So right in that area, so that would be kind of a resistance point right there. You've got that gap fill around 185. So somewhere in that range, if you are to take out this pivot, but lots of resistance up there. So again, all these charts kind of lining up very much the same, but those would be your levels there for the IWM. As far as our sectors here, so we always cover the semis here, and take a look here. So this downsloping trend line got hit again this week. Micron did have earnings. They reported gap down, but had a nice recovery off the lows. That did nonetheless take the sector down a little bit. Nvidia coming down to this blue trend line here. You can see I do like this as a support zone right here on Nvidia, AMD as well into that 74 handle, and Micron also right into this support level as well. So again, this would kind of be your bullish case here for potentially higher lows here. Semiconductors are a big sector, and they are a leading sector. So if they can find their footing, that would bode well for the market. And take a look at this trend line as well on the semis. We have to go back to a monthly here. So going back to 2015, you can see this is a big time trend line that we are into now on the semiconductors. Just closed the month just below it on Thursday, and then Friday, the first of the month here, July 1st, we gapped down a little bit, mainly in sympathy to Micron, but take a look at that monster trend line. So if that gets defended, there will be some good upside here for a bounce in the semiconductors, which will help tech out pretty tremendously. And then Some other strong sectors with some good patterns here. IGV, we talked about this as well. Cloud software has held up well. And on these charts here, we're seeing kind of what we call like a WV potential setup. So we come down here, you get a bounce, and now you basically pierce double bottom. And then you move up, and that creates kind of the W, and then the V part is essentially the higher low. So that could be a setup there. If we can get follow through, you have that chart pattern. Same thing with biotech, XBI, you got a W pattern, and then you had a little pullback kind of bull flag pattern here on biotech. So biotech has been a really beaten down sector, but again, showing this kind of bullish W pattern here. A lot of the big tech stocks, Apple, same kind of deal, Microsoft, Google with the 3 higher lows there, Tesla, also a possible kind of WV look. So if we can get that on some of these setups and some of these sectors here, that would bode well for the market, and that would be kind of your bull case for a higher low and a possible summer rally. Some of the weaker sectors, though, are the Dow transports here. So this one basically just hovering off of 52-week lows. You did get a nice reversal last week, and then we pulled back here and got a little pop Friday, just like everything else did. But again, on the weaker side, only a couple of points here off the 52-week lows. So that is not a good sign for the market. Financials, XLF, also a weaker sector. You do have potentially little higher lows here on the daily, so that's your positive. But look how close it is to 52-week lows. Broker dealers, XBD here, also a little bit on the weaker side, still stronger than the XLF. But again, not much off of the 52-week lows, and that's a little bit. I mean, you can clearly see the weakness in the chart pattern here. XLF versus the Dow transports, and then you take a look at the XBI, or you look at Apple, or even IGV with the higher lows here in the W pattern. So those sectors are weaker, and especially financials, that is much weaker right now because of bonds, especially the volatility in bonds. If we flip over to the MOVE index here, on TradingView, you can see we are above, pandemic highs here on the MOVE index, which is tracking bond market volatility. And even recently, bonds have been, we got a nice little bid here. We'll flip over to the 10-year. But the yield curve is very close to inverting on a lot of these, 2s and 10s, I think 5s and 30s. We got very close a couple of times this week. I think once or twice we did flip inverted very briefly, and that is going to hurt the profits of the banks. So that is the reason for the weakness in financials. But in the meantime, as far as the technical picture on yields, we are getting a pullback here. And I showed you guys this level here last couple of weeks. I said this trend line is going to be good resistance. We got a beautiful, look at the monthly candle there on the 10-year yield. So that closed out Thursday, huge topping tail. We talked about the weekly topping tail as well. So you've got a double topping tail with the weekly and the monthly. And it looks like to me that bond yields are going to go into pullback mode and correction mode. And really what's happening here is you've got the market looking at recession risk. And now with recession risk, there's some investors saying, well, considering how beaten up bonds have been, they're starting to look attractive right now, especially with recession risk, because with recession risk comes the Fed put. So that is essentially what we're looking at there. On the downside, if you take this area out on the 10-year, probably looking at about 2.4. If you get really like monster downside, would be down to that 2.07 area on the 10-year. I don't know if we get that far down, at least on this leg here. And then on the 30-year, if you can get through this little pivot here, then it's probably back to about 2.6. So that's kind of what we'd be looking at there on the 10 and 30-year. Another weak sector, speaking of bonds, is HYG, so high yield debt. Again, barely off the lows. If this does start to bid, though, that will probably be a leading indicator for some strength in the market. It was last month. It started bidding a day or so early before the spiders rallied. So keep an eye on high yield debt. You can see JNK there, also barely off the lows. And then LQD is getting a little bit of a bid, although this one is a little bit more correlated with the TLT as opposed to some of those the worst kind of junk bond ETFs. So anyways, moving on here, let's get into energy. So crude, really kind of a sideways kind of corrective week. It did manage to scratch out a gain on the week. You can see it was green a little bit there. And you did hold that 20-week moving average. So it just continues to hold trend on the weekly time frame, and it's holding up really well. You can't really say anything bad about it. Although if we do take out this pivot and this trend line, we can just flip back over. So there's your trend line there. If we do take that out, I think we head back down to the 90 to 95 area. And ultimately, if it gets through that, we're looking at 80 to 85. That would be kind of like I would think max downside right now outside of a total washout type black swan scenario. And that's a good thing. You know, that's a good thing for energy. We need to, you know, I've been saying that on here for months now. You know, I said, guys, don't chase energy. It's time, you know, we got to get a pullback here. We got to get a real correction. We got to shake out those weak hands. It's just an overcrowded trade. I still love energy long term. There's higher price floors, but we got to see a corrective move, and you know, that's why you got to keep cash on hand for when we get these types of moves here. But even so, crude is still holding up. It's still holding trend again on the weekly. But if it does get through this pivot, you guys know probably 90 to 95. That would be your near-term level, and then 80 to 85 would be kind of more, a little bit more down the road. As far as the XLE here, kind of just ping-ponging here between this one, you know, got stuck below that 100 moving average there. We broke through it, back tested it, and then we tried to put in a higher low. So we'll see what kind of pattern it gives us. XOP, same thing, ping-ponging between the 100 and 200, and the OIH on the weaker side here, closing below the daily 200 moving average. I do have levels for all these. I don't want to give them out here, so I will be playing them in carnivore trades if we get down there, but I still think there is a little bit more downside in some of these energy names. We just got to get down to those levels. And then finally, nat gas here. Stalled out, got all the way down to that 200 moving average before a little dead cat bounce. I think this does get a bid next week. This is a really good support area. So take a look at pivot high, you couldn't break through it, and then we surged through it, and now we're back testing it for the first time, and we're oversold going into it. Plus, if you look on the weekly time frame, you can see what we did here. Went right into that 50-week moving average, got a bid, and closed above 550. So good level here short term for nat gas. It should get us a good bounce here. And if it gets through that, you know, $5 or so on the downside, would be a pretty monster support level. And then if it could somehow get through that, 450 would be humongously strong support. I do not think it gets anywhere near that on this leg down, outside of you know, some type of, again, like a black swan news type catalyst. That's really what it would take to get down there, in my opinion, at this point. Let's take a look at the dollar. So dollar index, not much to say. You know, it remains strong. It's been up, consolidating in this upper range. And then that's even with the pullback in yields. So yields in the dollar have had a strong positive correlation for quite a while right now. But even with yields pulling back and bonds getting a bid, you know, we talked about the yen a few weeks ago. There's the yen. That remains weak against the dollar, and even with the pullback in bond yields, the yen's still weak, which is keeping the dollar up. So it's not as simple as, you know, one thing pulls back and the dollar goes down. There's a lot of things that can affect asset prices, as you guys know, and the dollar's, you know, holding up really well. So got to give it the respect right now. If it gets through this trend line here, and this is kind of a rough trend line. I mean, you could make a case it's not the most perfect here. I could probably edit this a little bit. But if it does get through that, I think 108 to 108.50 is your next big level on the dollar index. If it does go into corrective mode, which is a good chance for it, again, you guys know the levels on the downside. You know, probably, well, you'd have to get through this pivot first, but then 100 and then 99. And if somehow it gets through that, 97 to 97.50 is big support on the dollar. Gold here. Little pullback on Friday, finished off the lows, so you had a little double bottom there. Gold still remains strong, even with a strong dollar, so that is good. You know, it's showing relative strength here, and it's doing its job as a hedge against all of this uncertainty right now. I think, though, that gold will probably head lower over the next 6 months, though. At least that is my bias, and ultimately, I think we'll be presented with a pretty good buying opportunity. If we look at the weekly, we're still stuck inside of this red bar here. And I remember a few months ago, we were talking about this quarterly candle here on the dollar, or on gold. And remember I talked about that close for the first quarter. And I said, if we can close above this red bar, that would confirm to me that we're going to shoot to all-time highs very, very quickly. Couldn't do that. It got rejected. And then we basically had a reversal candle for this whole quarter. So I think that there's, gold will be under some pressure here. And I think we'll be presented with a really good buying opportunity down the road. When I say a buying opportunity, I mean a long-term buying opportunity. So stay tuned for that. I got levels worked on all the metals, silver included. Silver on the weaker side, made new 52-week lows this week, closed below that 200-week moving average. You will have some support at 1850, though. That was your breakout area. This still can go lower, though. Got levels worked out on that. Same thing on platinum. That had a nice dump this week. I still think that can head a little bit lower. Palladium's a little bit tougher. This one's been a little bit more range bound, much thinner market, but this one can head lower as well. And then copper got really close to a buy level I had worked out on this week, but look at the fall here. It is really oversold short term. You're into a lot of support right here in the near term, and it's oversold, so this can get a bounce, but I do think this heads a little bit lower before stabilizing as well. So metals under pressure, but big picture, I think we're going to get really good buying opportunities down the road here at some point in the near future, but we just got to remain patient with it and wait for that to come. Anyways, here, flipping over to Bitcoin, so we'll cover Bitcoin really quickly before we wrap up. Again, just it's not much to say here. It's been weak. We had a nice reversal here. I told you guys when this happened that we had a good chance of having a nice rally off the lows. You know, a lot of people had their stop just below 20,000, and they definitely ran those stops when they did, and we got a nice little kind of counter trend float up. But see, we tried to put in a higher low the other day, then we rallied up on Friday, got rejected at that 20 moving average. And really, to me, until you get at least above this 20 moving average and above this pivot here at 20,879 from Friday, this is still just in a weak technical picture. It hasn't participated in any sort of upside that the market has had. It hasn't really participated much in the solstice rally. We did, you know, come off the lows a little bit ahead of time before the market rallied, but you know, there's not much to say. The only positive right now is that everyone's so bearish that it's almost bullish. So, you know, the boat's getting too loaded to one side. But as far as a technical picture, this is in really bad shape right now. And it's really in prove it mode. If it can, you know, if it can prove it to me and get above this 20 moving average and then, you know, start taking out some of these pivots here, well, then, you know, maybe you can rally up to that 50 MA, maybe back test 27,500. But until then, it's just a tough trade right now, and I would avoid it at the moment. Lastly, yeah, so back to the spiders. Again, there's a chance we could put in a higher low this week. Again, based on seasonalities, I've done a lot of cycle work on the markets this year, and it's played out pretty well so far. You know, you guys remember at the beginning of the year, I said we'd have some downside for the first 2 quarters, and then I said we'd probably bottom around June, late June to early July, and so far, pretty much so good. You know, it didn't happen exactly the way I envisioned it, but essentially it all kind of arrived at the same place. The roadmap was just a little different here, but I'd say there's a good chance we have putting in a little ABC up and then having nothing more than a summer rally, just a period where things quiet down for a little bit, and ultimately I think we're headed lower some point later this year. Anyways, guys, gonna wrap it up here. Come find Jason on Patreon, give the video a thumbs up, subscribe, etc. Come find me on carnivoretrades.com, and I will talk to you guys all next week.